All right. Hello, everyone. Thanks for coming to the panel today. My name is Chris Cheatham, product evangelist at Bold Penguin. We do small business quote and bind. And so today we're going to be doing how to build insurance products bespoke for the needs of small business. And as a former lawyer, I'm going to do a quick disclaimer. We're not talking about like bespoke policy language, so don't expect that. But it's a really exciting panel. So I'm going to go ahead and have Kara introduce herself and just go on down the line.
All right. Well, good morning, everyone. It is great to be with you this morning. My name is Kara Hoganson. I'm the Senior Vice President of Specialty Benefits at Principal Financial Group, which really means I get to lead our group insurance business as well as our individual disability insurance business. Been there for about 25 years at this point.
Good morning, everybody. My name is John Swigert. I'm the co-founder and CEO of Pi Insurance. We are a small business-focused commercial Insurtech business. We sell workers' compensation insurance. We've been in business just over 5 years.
Good morning. My name is Ben Piening, Chief Underwriting Officer at Honeycomb Insurance. We specialize in habitational insurance for apartments and condos.
And I'm Sam Hodges. I'm the co-founder and CEO of Vouch. Vouch provides insurance for other high-growth venture scale companies in the technology, life sciences, and high-growth consumer products categories. Structured fundamentally as an MGA, 13 different proprietary lines of coverage, and we get to market through a network of affinity partners in the venture ecosystem.
Excellent. And just as a quick mention, if you have questions, go ahead and submit those. The instructions are there at the bottom. We will get to those. I prefer question and answer because it's about what you want to talk about. So I'm going to get started with you, Kara. And this is like a weird beginning question, but like we all come to these events to meet people and network with people, and we're talking about insurance products. So like, who do you want to meet with while you're here and why?
Great. I actually love the question. It's a fun way to get started today. So I would love to engage with others who are passionate about serving the needs of small businesses, specifically the needs around providing those small to mid-sized businesses with protection that will help them protect the actual business itself, like succession planning, key person, protect the needs of the business owner, think income replacement or disability insurance, as well as protect the needs of the employees that work for that business. So providing that peace of mind that will allow employees to be the most productive that they can be at the workplace.
Excellent. Okay, John, I'm just gonna go down the line with this one. So big CEO.
I just want to meet Kara.
Yeah.
I mean, Pi serves small businesses. We're passionate about small businesses. So I'm interested in technology solutions that can help us improve the lives of those small business owners. So we're a property and casualty insurer offering workers' compensation insurance. So what we want to do is we want to be able to more accurately identify what a business does. We want to be able to more specifically be able to rate and underwrite that risk. And so companies and folks that can help us do that would be the folks that we'd be interested in.
Yeah, sure. So great question. I'd be interested in meeting anybody that's passionate about habitational insurance and property and casualty that could help connect on a technology basis to better underwrite and price business, and as well as distribute to whether retail agents or wholesalers or direct to consumer.
And for our part, we're in the business of delivering really high quality insurance experiences for other high growth businesses. Toward that end, technology solutions providers who can help us do that well, do it efficiently, do it in a way that's very client friendly, and then also focus on the analytics and data front so that we can make sure that we are really understanding and pricing and underwriting the risks that we see across our portfolio in a really thoughtful way. Last but not least, always growing our team. So also looking for great folks that we can pick up on that front.
All right, and I'll answer the question too. So if you are a carrier and you sell small business insurance and you have or have not built APIs, love to talk to you to get you on the Bold Penguin platform. That is my one plug for the day. Okay, so let's move on then to the topic at hand. And I think defining your insurance product is important so that we can then talk about how it's very specific to the market you're targeting. So, Kara, if you could start and just talk about like, what is your insurance product? Like, how do you define that, right? Because it's like, yeah, it's a policy, but like, how do you define your insurance product?
Yeah. So really, what doesn't look like the rest up here on stage is me. I'm actually, because I'm not in the P&C business, I actually am going to really focus my comments today around employee benefits. So Principal is a global financial services provider. We provide a lot of different types of products and policies to customers. But what I want to really hone in on for purposes of this morning is really what we do to help small to mid-sized businesses attract and retain talent. So at the end of the day, our product is around helping those businesses make sure that their employees are taken care of. And by providing that peace of mind to those employees, whether it be through life insurance coverage, whether it be through long-term or short-term income protection coverage, ultimately enabling those individuals to not have to worry about things outside of the office so that they can bring their best selves to work. And we differentiate around that because for that small business, that owner who does not wake up each and every day thinking about their benefits program, it's got to be simple, it's got to be relevant, and it's got to be trustworthy. So we focus on not only the beginning part of that experience from quoting, but all the way through the claims experience and every aspect in between to make it as easy as possible.
Okay, excellent. So I'm a commercial insurance guy. So John, we're going to turn to you. And I'm really interested as we move down the panel on the commercial insurance side as well, like how you all define your product and like how you're different from each other, if that makes sense. So can we talk about like your product? What's your product? How do you define it?
So I'm not super familiar with Honeycomb, so I might say some things that we're not that different. We are the insurance provider. We sell our own policies. We price, underwrite them, service them, do the claims, and so forth. So we're not selling other companies' insurance. So when I think about products bespoke for the needs of small businesses, the thing that really excited me, I spent 13 years in auto insurance before this at Esurance. And in the commercial market, the service offering for the small business is actually not designed for their needs primarily at all. It's designed for the needs of the actual insurance companies that are providing it. It's taking a middle market or a large account process with human being underwriters and distribution channels and things like that and shoving it down to the small business end. And it's not efficient. It's not very accurate. And so the needs of small business owners are efficiency, speed, value, low price. Those are the things that we build into our experience and really leverage our technology to deliver a better insurance experience, a more accurately underwritten policy, and make sure that we're meeting actual needs of the small business owners to, again, save them time, save them money, and give them a better experience.
Okay, so Ben, I think you all target like real estate in particular. So can you talk about that and how you craft a product specifically for the real estate market, for the real estate customers you all target?
Sure. Honeycomb specializes in apartments and condos. So naturally, just by that, we're carving out the P&C space to wake up. We wake up in the morning, we think about habitational insurance. We go to bed at night thinking about habitational insurance. But we also look at we're competing against institutional carriers, and we think we could provide a more timely product because a lot of times when agents that we primarily distribute with, the time from quote to bind is weeks and weeks and weeks just to present back to their client something, a quote proposal. Sometimes that takes weeks, and as John said, that process is middle market and large account process, and it's really not tailored to small accounts where it doesn't require that broader perspective and kind of a human touch to it that you could actually achieve the same, if not better, efficiencies by using technology, AI, computer vision, mega data, and a little bit of common sense in there to move it along in that process in a much more expedited fashion. So Honeycomb is reinventing that space by not only by being able to turn around a bindable policy within 5 minutes where the industry is lagging in weeks. The second aspect, as John mentioned, in the P&C business is not only using that same technology to move the business faster, but also to risk select, which is probably the most important aspect of saying not only not price, but also say whether this is a good risk that will perform well or not. I always believe you can't price your way into profitability, but you risk select your way into profitability. So we're using that same data and technology that we're bringing on the front end to then tailor our policies on pricing, on terms, on coverages, on conditions that then make us either more attractable in the marketplace or less attractable in the marketplace for those risks that we really want to go after and add to our portfolio. And I think that's the two areas that really bespokes Honeycomb in the marketplace is our speed and our ability to better right fit and price accounts that should perform better than our peers.
All right. And Sam, I think you all target like growth companies and startups as well. And I still remember the first time when I was a startup CEO filling out like an application and just how horrible the process was. And it was like, there were crazy questions like, what is your EBITDA? And like now I think it's hilarious because like, well, it's very negative. So like, how are you building products for those types of companies and how is it different maybe from other products out there?
Well, and that experience is exactly why we started Vouch in the first place. I've had to buy commercial insurance dozens of times for companies I've been involved with, and it's terrible, right? And it's terrible on multiple levels. It's not only terrible in the experience of getting it, right? It takes weeks, if not months, but also the actual coverage isn't right sized for the risks you have if you're building a high growth business. Moreover, if you actually are in a high growth business, guess what? Those coverage needs change a lot. Every time you raise more money or add people to the team or have to go and close a major enterprise sale or partnership, almost always you're going to need to make adjustments to the coverage that you have. And so what we've designed Vouch to do is to make it really easy, not just to get the insurance up front and to make sure that that insurance has the right tailored coverage features to meet clients where they are, that covers the risks that they have, but also to make it really easy for them to evolve that coverage through the life cycle of the account. And we have many examples of accounts where they'll come in one policy period, come and do 6 or 7 endorsements or multiple limit changes or additions of additional lines of insurance. And so I think it's when you think about what is product innovation in the context of small or mid-sized commercial insurance, you have to think about all of these dimensions. It's not just the form or how it's underwritten, it's also the digital experience and it's the full servicing of the life cycle of the account, what I just mentioned, and also claims. And so we've tried to take that full kind of through cycle view.
Okay, and I have a follow-up for you as well, Sam, and this is a bit of a curveball. We didn't talk about this beforehand, so hopefully that's okay. It's a really, we're turning into a rocky time for funding of technology companies and startups and growth companies and all of that. So it sounds like you're really attuned to that marketplace and those players. Like, what are you seeing? Like, how do you advise them differently now based on, versus like 2 years ago or even a year ago? In the sort of startup and technology and growth world?
Yeah, it's a great question and certainly one that we are very tuned in on. I don't think there's any question there has been a correction in valuations for early to, frankly, public stage technology and life sciences companies. Some of the growth premia that were in there before have gotten pulled back. That being said, early stage pace of financing remains very strong based on a lot of the indicators that we look at. We continue to see many of our clients have great success in growing their core businesses. I will say I think people are more cost conscious than ever, just with some of the fundraising pressures that have come up in the last 6 months. And so that's something we're very attuned to. I actually also think, and when we talk to our clients, this really shines through, I actually think right now is a wonderful time to be building a startup, right? Strong companies are going to be built in this period of time. And if you look at the last set of market corrections we've had over the last 20 or 30 years, more recessionary periods are actually oftentimes when the best companies get built. It's a great time to be attracting talent. It's a great time to be attracting partners. Oftentimes competitors or larger companies that might have wanted to come into the space get scared and pull back. And so if you're actually onto something and can really, have momentum, during this, however long this period lasts, I think this is a terrific time. And we certainly see that across our portfolio of clients.
Yeah, just to add to that for a second, like I spoke to a gentleman who runs an innovation fund at an insurance company, and he said they're kind of like going quiet for a little while. I was like, this is not the time to go quiet. Like, if a company is getting funded right now, like especially like a beginning one, they have an amazing problem, an amazing solution, and probably some revenue too that you didn't see maybe in that first wave of Insurtech that came about. So those are the companies that are going to be like fantastic coming out of this. So I actually think it's going to get really interesting in the next 5 years, starting essentially right now. Okay, so then I want to shift the discussion a little bit. We're talking about insurance products that are bespoke for small businesses. Obviously, we have a panel that targets different small businesses in different markets. One thing that I learned since I've joined Bold Penguin is like how important it is to get customers, right? Like customers that want to buy insurance, which is not something I thought about when I was doing back office solutions before. So I want to talk about like, how do you attract customers' attention, right? And like, how important is it to have that bespoke product to get their attention, or does it not matter at all? So can you start with that, Kara?
Absolutely. So, and I want to piggyback off the comments that Sam and Chris made, and just put a plug in that a lot of small businesses actually think they are too small to offer benefits. And that is the furthest thing from the truth. Just from our perspective at Principal, we cover groups from 2 employees up, and most people actually overestimate the cost of what it takes to offer those benefit programs. So if you think about the need to attract talent to ultimately help drive growth, benefits are a key component of that. So to the specific question that Chris just asked, I would say that the way that we go to market is we work with insurance brokers. 99.9% of our business comes through insurance brokers, both national, regional, and local firms. And the way that we get the attention of those small to mid-sized businesses is through the relationship that they have with their broker. And that broker would choose to come and do business with us because we really focus. We wake up every single day thinking about the needs of small and mid-sized businesses and how they can best take care of their employees to drive the growth that they're looking to drive and to serve the customers that they're looking to serve. And that's everything from making sure that if they have a benefit platform, that they have leverage. So brokers often, one of the big things we're seeing is the up and coming brokers, the ones that are gaining the most business, are leveraging platforms. And these platforms ultimately make it easier for the broker. They ultimately also make it easier for the employer, so that if there's an employee change, they only have to enter that change once into this platform. And then that will ultimately feed all the different benefit providers that particular company is doing business with. We have API connectivity to make sure that all the information is being exchanged real time, and it's a win-win-win. So I would say it's really the combination of the local relationships that small businesses have with their brokers, the technology connectivity, and then the third thing is really the flexibility. So to the comments earlier about a lot of times mid-market or large market solutions, we attempt to bring them down market. We haven't taken that approach. We really have built everything for the small market, and with that in mind, it's all about the ease of meeting the needs of those small businesses and offering the same degree of flexibility around employee benefits that a large company would offer.
Excellent. Okay, so I'm going to shift a little bit before moving down because we're starting to get some questions in. So I'm going to present those. So if you want to take this question, does the panel feel there's an opportunity for a subscription-based product in the SMB segment?
A subscription-based insurance product, I assume is what we're talking about.
I think that's right, yes.
That's kind of what insurance is.
Yeah. Can you elaborate on that, actually?
You buy a policy, it has a term, you pay for it over time. It has coverage that sort of goes for a certain amount of time. Usually it renews if a renewal is offered and so forth. So it has subscription economics in it. So I'm not sure I understand that.
What about the like a policy that renews, monthly, or it's like turn on, turn off?
I was in auto insurance for a long time. Those are really challenging from a regulatory standpoint to have these non-traditional policy terms. And so there may be a way to do them in some specific lines and so forth. But that is not something that we feel is a major obstacle to innovation or to delivering customer value. Would be things like policy terms and so forth. Yeah.
Sam, I'm actually going to throw it down to you because I could see startups asking for turn on, turn off insurance, subscription based potentially. Do you get that? Is that something that's on your radar?
We hear something a little bit different, which is our clients want insurance that scales with them. where it's really easy to make modifications to the coverage they have as they go through changes in their business. No entrepreneur wants to be overpaying for anything, certainly not for insurance. And so one of the value propositions we have for our clients is you can come in and let's say you start with general liability and $1 million in limit in D&O. Well, in 6 months, when you raise more money and or when you close an enterprise contract, we make it really easy to add on to your coverage, to raise limit, and also to say you need to add cyber or APL or E&O. And all of that is then managed through one central account, and it's in effect serviced as a subscription. So I agree with John's kind of fundamental point, which is, I jokingly say insurance is kind of the original SaaS on a lot of levels. That being said, mid-policy adjustments historically are very painful, and that's one of the friction points we're really trying to solve for with Vouch.
Ben, I'm going to turn to you for this one because you're a chief underwriting officer. I was trying to remember who the chief underwriting officer was. So cyber, right? I'm not sure how that rolls into the real estate product, but can you talk to the cyber policies or how you view cyber insurance in the marketplace? Do you feel comfortable doing that?
I would say I don't have a ton of experience in cyber with real estate. I would say with small business, typically they aren't targets of big cyber hacks just because they don't have the full extent of the user profiles that they might be going after. But also they lack the sophistication with controlling hacks and two verifications and all those other aspects that small businesses might lack just because they're new and they're starting and they don't have the technology in place. They have a great idea, they have a solution, we'll figure everything else out down the road. But they still probably have an aggregated amount of consumer information that is very hackable, but they just don't have the protections in place. It's probably a product that's quite needed for that space, but typically quickly overlooked.
Sam, do you roll a cyber policy into your stuff?
We do. So we do write cyber directly. We also broker cyber policies from a number of other markets through our specialty group, because many of our clients actually have to carry very high cyber limits or cyber towers in order to meet their contractual requirements with their end clients. What we've seen in the cyber market, probably similar across many other segments within small and mid-commercial, number one, a lot of primary markets are pulling back due to loss experience and aggregation risk that they've experienced over the last several years. Number two, the market has hardened substantially. And number three, we actually see really interesting opportunities to come in and offer some pretty unique coverage and also lots of opportunities to price the risk differently based on how we think about some of the underlying exposures. Now, some of that, frankly, is very unique to the type of client we serve. These tech startups definitionally are going to be more tech forward. They're going to be built on modern cloud solutions. They tend to have a very strong approach on security for the most part. And so because of the way our clients' tech stacks work, we can do some things around how we think about coverage and underwriting that I think are a bit harder for other segments within small and mid-sized commercial. But there's a lot of choppiness in the overall market. Definitely a big opportunity as folks figure it out.
The one point I would add is beyond the insurance. I mean, we have to recognize that we as humans are the weakest link in the whole cybersecurity ecosystem. And so there is an organization. It is absolutely free of charge. Anyone can go out and leverage the tools they make available. It's called Cyber Readiness Institute. Principal happens to be a member firm along with MasterCard and Apple and several other organizations. And really this firm focuses on helping small businesses address their cybersecurity risk. Things like training around password protection, appropriate use of USB drives, multi-factor authentication, and the like. So I'd encourage you, whether it's for your own business or for your clients, that's a great thing to tap into. They actually offer a certification program so that someone at the small business can go through some special training, kind of not necessarily become an expert, but be that go-to person to help guide other employees on what are best practices and what are the do's and don'ts to try and protect the organization.
Okay, Kara, I'm going to keep you on the spot for this next one. A couple of questions, actually, but we'll take the top one here. So workforces are now dispersed, although we're seeing it's tense right now between working at home, coming to the office, what's working, what's not working. So how does that all square with the benefits that are being provided as well? How are companies addressing that right now? What do you see is changing now that people are working at home and will that be shifting again here in the future?
Yeah, it is a bit of a moving target. I would say benefits are taking on an importance unlike pre-pandemic, just because as we see wage inflation, as we see this war for talent intensifying, benefits are a key way that businesses can differentiate their place of employment as the place of employment. You know, one of the things, so from a remote or flexible work arrangement, we only provide insurance protection here in the US. And so I can't really speak to the global nature other than to say, at least for the coverages we write, those coverages really do pertain to US based employees. And so if it's a larger company, even a smaller company, will want to have conversation if they've got individuals that are working remotely for longer than a few months at a point in time, because it could present some challenges from a benefits perspective. The other thing that I would say is, you know, small businesses often want to know, what am I offering or not offering that those firms that are similar to me, whether it's the same industry or whether the same geography, you know, is my benefits program comparable to others? We have a tool available online. You can Google it at Benefit Design Tool. It allows people to enter information on their benefit program and see what similarly situated companies are offering. It's a great way to understand, remote work or not, if the benefit program is actually competitive or not.
Okay, great. And this may be the last question, but John, I want to ask you a similar question. How did you see insurance shift when everyone went remote? Like the products that were being requested, what was in those products? Did you see a shift at all?
We didn't see a tremendous shift in our customers. Our customers are different than Sam's in that ours are much more service industry based, and there was much less. That's a lot of in-person work. You can't be a carpenter through a Zoom window, and so what we did see, though, was on the distribution side. We are multi-channel distribution, so we sell directly, we sell through agents, we sell through partnerships. On the agency side, we actually saw acceleration, because what we found was a lot of agents not working with Pi struggled in their transition to work from home. But when they sign up with Pi, they can access all of the tools that we need just through a basic web browser that may not have been the case for some of the other tools that they were using when they were in their offices. So that was one change that we saw. We certainly see, we don't have all service industries, so we do see an increasing amount of our customers who have employees who are working from home, and that does change the risk profile. Usually not in the positive, to be honest. You introduce a lot more variance and variability in terms of the environment when you have employees now working from various different home environments versus in the office.
Interesting. Okay, so I think I'm going to do one last question if we have time for that. I'm going to put you on the spot for a second. It's that last one. This may be tricky. What role do NFTs have in insurance? And I picked you out because you're the startup guy, right? So I don't know if you've thought about this at all, but do you have a view on this? Are NFTs going to be involved in insurance at any time soon?
So I think it's a super interesting question, and we do see this. We insure a number of companies in the Web3 space, and we see, frankly, a lot more opportunity around that. I actually think this question could go in two directions. One is, how can you provide insurance for companies and users of product in the NFT space? It's a really interesting and tricky question, just given some of the crime and cyber risks, and also, frankly, how some of the organizations work fundamentally in that category. That is something we are spending a lot of time thinking through, and all I can say is more to come on that, hopefully here soon. The second question, though, or kind of related way you could go with this is, could you actually put things like COIs on chain or turn COIs into NFTs? Could you put more of the insurance value chain on the blockchain? And our perspective on that is absolutely, but you need to be really thoughtful about where and how you do that. It's not necessarily something you just want to do indiscriminately. We do see certain opportunities to thoughtfully apply blockchain technology with respect to how the insurance value chain works, but also how some of the documentation, including COIs, work. And maybe you will have NFTs in effect that are COIs at some point. It's kind of a fun idea.
Excellent. Okay, so I appreciate everyone's time today. I'm going to wrap up the panel and don't want to stand between you and lunch. So thank you for coming.